Guys, this is Simon with Trade and Perform Coaching. So the last video I listened to, the audio actually got a little too good and I was too close to the mic. So I'm hoping this will work out better. Okay, so the only point of this is to find out how I would use the 40 tick. Let's say the 40 tick's the only tool I had. So what I want to find out is first if I trade it blindly. So first of all, let's find out what the risk is on this. And let's assume I'm going to trade two contracts and I'm always shooting for 1-to-1 RR risk off on the first contract. And then I'm going to push for, let's say, double that on my second contract. So I always end up like 1.5 RR, and then we'll see if it goes further. So the first thing we'd have to know when we're looking at this is, well, what's the risk, right? So if I put this at the top, put this at the bottom, this green bar, the risk on this is 75 to 52. It's one example. This at the top, this at the bottom. That's 15 to 88. So that's 90 would be 25, 30 points. So let's assume we have if you go through and measure these, it's usually no more than 30 points. So let's assume I'm going to risk $600 contract, right? Now, if you need to trade fewer contracts, you can always trade micros. And the goal of this is for people who want less noise. And we're going to look at this in 2 points. We're going to look in very high volatility, low volatility, and the current environment. Then we're going to start off with the current environment to begin with. We're not going to assume that we know where support or resistance is, but we are going to require a pullback before taking the trade. From the high, it has to pull back a minimum of 3 bars. Okay, so no 2 bars and then algo like this. We would not take this. We want to see 3 bars down and then the setup. Okay, so that's what we're doing, and we're just doing it off the 40 tick. And we're going to see how it looks like. Now remember, you'd still have to figure out, well, how do I know where the extended extension is? And we have rules for determining, when we're trend up, trend down, if we're below the 200 period moving average, if all 4 Keltner channels are below, if they're above. We really have, we're really not struggling. We're going to figure out, oh, this is going up or, oh, this is going down. And we trade to the long side the majority of the time, and we know where support or resistance is. So this is all being done. We're taking away a big part of our edge just to figure this out. So we're going to start on Friday, and we're going to look during the U.S. market session. So even pre-market coming into the session, you'll see that we have on the 40 tick at 711. We'll just start here. Pink star down, stuffed. You can see the algo on one of our algos already takes it. The risk on this we're going to assume is 30 points, and that ran monstrously. Star down, green bar up. We have another algo that takes that. Again, 30 points. And that runs from roughly, let's call it 485 to 542, 60 points. 3 bars down. Right, again, I would draw a 50-60 on this, but we're just looking at all of them. Minus 30, you lost $600 there, right? Next entry, 30 points of risk. Runs from 515 on up, and you're starting to get it. Like Friday was a big up day, right? So I'm not going to show, hey, every one of these ran. So I just want to go and look through quickly here. Win, loss, win, loss, win, loss, etc. So win. So look here at 838, stop. Right, that's one of the most volatile days. Stop. Win. Right, there's your stretch. No one would have taken it up here at this point. They would have waited for a pullback. But if you go with the 3 bars down, that's white bar stuffed. Stop. Right. Star stuffed. Not a stop. You would have been able to get your risk off, but yeah, not so much. Stop, right? So you're going to start to see, well, I'd like to align it close to the 4th channel, things like that. But that's not what we're trying to solve here. We're just looking and going, if when I think I should take a trade, right? If when I think I'm in an area where I want to take a trade, whether it's support, resistance, 50-60 retrace, whatever you're using to figure out, will the green bar help me? So star stuffed, stretched, star stuffed, stretch. Now you may up it, you might say I need pink star stuffed, right? I wouldn't do white bar stuffed, right? But I would do white bar, green bar up, and I would do I would have taken that one. I would have tried to get a continuation on that. If I was doing this and I would have lost, I would have taken this, gotten paid. No, not here, not just white star stuffed. Now we're waiting. I would have taken this. That's a loss, right? Count minus 30. No trade down here. It just didn't set up, right? Long, obviously you got paid. No 3 bars down here, so no trade. White bar by its stuff doesn't mean that much. I would have taken that. You probably got a scale. I mean, it did stretch 72 to 92. Most people would take something off on that. And that was the end of the day. Oh, and that wasn't even, that was back in on 5:30. Excuse me. Here, we'll go to this is Friday. I apologize. I was back in the wrong place, but the concept and the idea hold the exact same way, right? So I'm going to skip 5:30 because I already did this review showing what I was looking for, and we already know that the algos worked there. So I'm going to go back, and where I'm going to go back to is one of the hardest places. That's when VIX was at 60, right? And then I'm going to go to a very low VIX, which would have been prior to this week. We had very low VIX and show how it works, right? So let's go back to April. Now in April, VIX went to 60. I don't have 5 loaded. Let's go and increase the number of days. Just stick with me for just a second. Here we'll do 150 days. It'll load right up. By the way, if you're getting bored, you're probably just looking for fast, easy trades. And I understand that. My room's probably not for you. All right? You have to know the process in order to capitalize on it and get paid. Getting paid is what it's all about, right? So let's go back. So here's April when all hell broke loose. We'll just look on Monday morning, right? So if you were to come in, you can already see how fast it is, right? And you can already see where this algo is programmed. The trader assist is programmed to take the trades automatically. But we're going to go through and pretend like we're doing it manually, right? So obviously you want a suicide mission. We would not have traded the first 5 minutes even, so let's just skip right past that. And we would have gone to 8:35. Now let's just look at our trades. I want you to focus on the color bars and the pink star stuff. There's too much else going on in here to do everything else. And that would have been realistic during this period of time. So trade 1, trade 2. So if you're trying to get if you look, we're just in straight trend down here, and we don't have any reference for support or resistance, and we haven't impulse moved to the upside. So this is, you're taking contra and straight down markets. Generally not recommended, right? So trade 1, trade 2. You'll notice this is programmed to take the trades off this blue 4th channel and not just over here. So blue, right? Again, it got a stretch, but straight down market, right? As a matter of fact, we probably would have been taking that short realistically. So going down. So here comes the stops, right? This gets a little lift. Stop, right? Now, look, if you don't keep your cool right here, this thing just rocketed to the upside, right? And I'm as guilty as anyone not keeping my cool. So I'm mentally practicing this right now as we speak, right? So come up. Come over here. Now, this did take it in the top of the channel, this particular setup. Pink bar stuffed. 3 bars down. Green bar. Rocket launch. 3 bars down. Pink bar stuffed. Lift. 3 bars down, more than from the top. Green bar up, no trade, only 2 bars down. You have to have 3. Okay. 2 bars down, no trade. more than 3 bars down, white bar up, long. This algo doesn't have that on here. Obviously, you got paid. Now, here's where the test comes in. This is the first pullback, right? Stop 1, trade 2, stop, trade 1 stops you, trade 2 pays you, trade 3 pays you, trade 4 stops you. This probably stops you. I mean, like, who's going to take that off there? And again, you would have been better off waiting for the pullback, yada, yada, yada. But I'm just going through the trades as they appeared, right? I'm not doing any additional thinking or break a swing or anything like that. I'm just showing you with the algo that I would have taken. So long, obviously paid. Long, that's a great trade. Pink star down followed by a green bar is just excellent. Obviously, monstrously paid in that particular situation, right? Anytime you get that fast to move, you'll notice this is all within seconds. It's just fast, fast, fast movement. So these are almost impossible to execute. I don't know what the algo would have done, but even then there's like a pause in between auto execution. So you probably took a stop there and it didn't do anything. Now back to regular trades. You don't get any of this because no 3 bars down. Just stay cool. Right? Excuse me, I apologize. No 3 bars down. Clearly 3 bars down, you probably took a stop there. Probably took a stop here. You got paid here. This one didn't stop you, right? See that? It didn't break the low. I think it held it. Push down. Pink star stuffed. Green bar stopped you. This is all before 9:15, right? So this is massive volatility. Paid, again, the RR is huge. And this is what I'm doing on my weekends, right? So the volatility is increased. I completely and fully intend to implement the 40 tick into my trading this week, guys. You should too, right? Anytime you get bored of this video, but just know I'm doing the work every weekend. I'm looking at it. I'm in here, right? I know on these 40 ticks, this is getting, the reason this is important, let me explain this. This is a big chart, right? This rotation down, let me explain why this is working. That is a rotation down from 27 to 72, 50 points. The average NQ rotation, harmonic rotation, is 30 points. That's 1.5 times the average harmonic rotation. This is even bigger. This is from 27 to 40. It's almost 3 times the average harmonic rotation. That's why these trades are working, right? Notice I'm not having to elaborate about I knew, I gave you, none of that stuff, right? So stop, trade, stop. Oh no, not 3 bars down, excuse me. Trade, excuse me. I don't know why it's doing this, but I want it to go right there, so I'm just going to erase that. Oh, that's so weird. Why is it doing that? Let's try this. It's super bizarre. It's going to run amok, so we'll just use the circle instead. Not 3 down, not 3 down. Right, again, if I don't recognize that it's impulse move, I would know where support resistance is, but that's most likely a stop. Like the first thing I'd be saying is, hey, all the channels are down. We're good at this in the room, right? We don't have a problem figuring that out. Long on the orange bar. That was pretty easy. Okay, here's where it gets difficult. Star stuff. You'll notice we're now under the 200. Who knows? I don't even remember what's going on anymore, right? So stop, stop, paid, paid, right? That's in a fast moving market, right? And guys, I can tell you, we were shorting in this period of time. You would get totally paid on that. But we're focusing on where it's hard and where it's long. If you took that, paid, stopped, paid, not 3 down, stopped. This is only 9:30 in the morning. Stopped. And by the way, you're most likely your stop, if you go back, I want to back up on this a second. You'll see most of your wins, the bar isn't just closing back down. So really the stop you're going to use is wherever this bar closes. It's going to be less. Like this stop here would be this. Entry 48. You're going to look at wherever that bar is going to print and adjust your stop to. So this is 48 to 29, which is actually 18 points. It's pretty reasonable. So let me recorrect this. I'm calculating for ease on 30 points, but realistically, the entry on this is going to be a 1-bar reversal. It's going to come out to about 18 points, not that much more than your 24 tick entry. Okay, but great follow through in terms of telling you when the market's going to push. Okay, so I want y'all to keep that in mind. Realistically, you're going to use an 18 to maybe 25 point stop. Obviously, the algo will tell you where you have to put the entry and exit. All right, entry. It's literally great entry. Star down, blue bar up. The only way I would have given this is I would have assumed bigger push than what we got. Stop. Entry. Stop, then entry. It's actually a double stop at the bottom. So if you look at this and go, well, geez, this just has to work for me, and I can't take the double stops, you just have to decide how many stops you're going to take in an area, right? Long, paid, long, super paid on that one. Long, stopped, long, stopped. So understand, long, paid. Understand once you adjust, so you know that this stop, if you look and the bar tells you it's 18 points, you can now adjust your risk on this, because when you look at this, let's say you take 2 contracts, and let's say the stop was 18 points. So this goes a maximum of 13 points, right? So that's either a full 18 point stop, right? Because the stop was probably about right here, right? Maybe 20 points, but it's not the full bar. Like you do not want it to close in behind the body of this bar 99% of the time, okay? So as you're going through, this is long. This one made it to scale, most likely. Maybe not here. So let's just go stop. Stop. Again, you impulse move, right? Trade. And I can tell you, I'm not going to be just randomly taking these, right? That is not my goal. I want to be clear. I'm going to be trading at the way I'm using the 40 take is at location, at the 50-60 retraces, and then fire, right? What I'm showing you is simply like, for example, I would come over here. First thing I would say in the rim. So I'm going to go like this. I'm going to highlight this area right here. So I'm going to go stop, paid, paid, right? Just behind the 62. I'm not sure I would have taken this one, but it would have been stop and paid. Okay. But I probably would have realistically, because I'm also going to do this, right? I'm going to take that same retrace. And I'm going to go like this from the bottom to the top. That's roughly it. And I'm still going to go, okay, I'm at the 50-60 retrace. I'm still going to go long. This is 382, so long, long, and I'm going to get stopped on this one, right there. No problem. And remember, we knew this was down. We're actually going to do quite the opposite. If you change this on the 32 tick, it's going to be short, 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 but I'm trying to show you the hard way, right? On this particular day, stop. Green bar stuff, man, I probably would have taken that. Long, I definitely would have taken that, right? No 3 bars down, 3 bars down, white bar up, I would have taken that. I would have taken this and gotten stopped. And I would have taken this and gotten paid. The key to the whole thing, right? The key to the whole damn deal is knowing where to take your trades, manage your risk. Once you know what your risk is, you can measure off. I'm probably taking that every time on this particular day. I probably took this and got stopped. Took this and got paid. But 3 down. I took that and got stopped once. See how this bar was inside this bar? I've already been stopped. Maybe I took it twice because of the volatility. So let's just say I took it twice. Paid, stopped, right? And if you know me in the room, if you're in the room, you know we're not taking everything. As a matter of fact, what I'm probably saying is pay caution, right? I'm looking for diamonds up and then my next trade, right? Now, here on this impulse move, yeah, I'm looking for this, right? So I don't want people who are not in the room to get the wrong idea. We're not taking every single algo necessarily that fires. Generally, we're focused on taking them in support resistance. The point of this exercise is to show you that, yes, you have a very good odds of getting a nice fat extension of some sort, right, off the 40 tick. Now, that was when we were at highest volatility, right? Now, jump forward a month and a half. Go to the middle of May. Okay, we've slowed down pretty dramatically here. Well, at least I think we have, right? What day? This is Wednesday. Let's go Tuesday just to make sure we don't end up on a Fed day. All right, nice, gentle Tuesday. All right. So the first thing you'll see is we're chopping overnight, right? We're not really moving one way or the other. The bell rings, right? Ding, ding, ding. And we are chopping, right? See how it's coming down low? So if you look at this, right, support resistance will matter. So we don't trade the first 5 minutes. Really, this becomes your first trade. And let's just say that stopped, right? Bar down. This is trade 2 right here. May have stopped. And this is trade 3. Now, there are things you could have said to fix it. Like, if I want to take a trade, it's got to be green bar up and it's got to be off the 4th channel. Nothing wrong with that, right? You see where the algo is actually taking. You see where the algo is actually taking the trade is for the most part off the 4th channel, right? And we all know the first half hour is the hardest part of the day, right? So here you'll see 907, green bar, you go not up, touches the 4th channel, beautiful rotation. See the white bar down if we were still shorting, I don't think we were. So now look, we roll down, blue bar stops, blue bar pays, no trade over here, star stuffed. Oh, and that's the end of the day, right? So if you were to come in and look at this and go, well, geez, Simon, that got a little bit harder, right? That's where I would have said the volatility isn't high. If you look at this whole rotation here, the volatility is not high enough to that you're going to need to get on the edges, is what I would say, right? You're going to need to get on the edges to make this work, right? So let's go to so there's 520, right? You said, okay, well, that was a difficult day to make a profit, right? If I'd taken this trade, it stopped me, I would have had to take the trip back in, but granted, it rolled back to the upside, right? If I came over here, if I took this trade, it went up a little bit, but no extension. If I took this trade, yes, the stretch worked. And you can still see the shorts are actually working quite nicely here, right? And if you go to the next day, and we would be on the 24 tick here, it just got slow, right? There's no question. But here you come into 8:30, again, we would skip the first 5 minutes. And this goes trend up. So your first trade, okay, so I don't know what happened here, right? Obviously there was a White House press conference, something like that. If you did that, this is stop. Everyone would have known this is press conference. Like that thing fell out of bed so fast, would have just been halt, right? But nonetheless, stop, small lift off the pink star stuffed. My goal is not to, I already know the process works when I add all the pieces together. So my goal is just to look, hey, how does this work? That is a great stuffed bar. Blue bar on the turn. In this particular case down there, I would have taken that, stuffing that orange bar, right? And once I saw this, I would expect my trades off to the right to work, right? So when I look at this, green bar, blue bar stop, green bar. Why would I expect it to stop? Because that was orange down followed by blue up. Someone really jammed someone on the volume. Stop. Paid, right? So in an environment like this, I'm going to stress more, hey, you got to get to location to make these work and use these as confirmation, right? And you'll see as we ebb and flow, I'm going to now jump to last week where the volatility was really low. but we knew that the bias was pretty strong to the upside. So here's, and not this past trading week, but the week before when we got really slow. So that was like 8:15. So we'll just do it on Monday, right? So here's Monday morning, and we'll get past the first half hour. Trade one, trade two, trade three. Another 3 bars down. I'm going to sit and wait. Very low volatility. That's Tuesday. Excuse me. Here's Wednesday. Past 8:30. Green bar up. Green bar up. Green bar up. Nice pace, right? It really, you have to be able to read the tea leaves in terms of if the environment's good or not. But generally speaking, we're pretty good at that, right? So trend down. Green bar up, beautiful reversal. Green bar up, beautiful reversal. Not 3 bars down. Stop, you gotta take the trap back in to make that work. Green bar up, probably fall out. Oh, that's in the middle of the night, sorry. Then we'll go to Friday the 15th, 9 a.m. Pink star stuff, that's really nice setup there. White bar up, green bar up, white bar up, and that ends your day. So, here's my point to all of this. This is very important, especially if I'm coaching you one-on-one or I'm teaching you how to do this. Now combine your support resistance zones, your 50-60, and your general understanding of which way the market's going and where major support and major resistance is, then plug these pieces in, and you will get fat rotations out of that. And you can use your 24 tick to the entry and the 40 for confirmation, finish the trade, right? That should put more P&L on your plate. If you have any more questions, you can email me at TRADEnPerform@gmail.com. It's in the description of this video. If you'd like to visit the room for 5 days, email me and ask for a 5-day pass. And if you're against paying money for any information, don't bother at all. Like, you know, I'm a capitalist. I charge for my stuff, and I have no issue with it. So anyways, I want everyone who I can help make money, and hopefully this helped a little bit.